Welcome to the Stock Market Daily News Podcast. It's Wednesday, February 26, 2026, and here's your essential recap of yesterday's market action. U.S. markets closed lower as tech and software shares faced renewed selling pressure, with investors jittery over artificial intelligence disruptions. The S&P 500 fell over 1%, the Dow Jones pulled back nearly 1.3%, and the Nasdaq led the declines, down almost 1.6%. Today, we'll break down why AI anxiety is fueling a sell-off in IT stocks, plus we'll look at rotation into defensives and what's happening in Bitcoin and shorted stocks. Stay tuned for the key moves every investor needs to know. Let's start with the big story. Tech stocks took a heavy hit after AI firm Anthropic stoked concerns that tools like Claude Code could automate software maintenance. The result? India's Nifty IT index plunged nearly 5%, its lowest since August last year, and IBM dropped 13% overnight, its biggest one-day drop since 2000. Investors fear AI could sideline traditional software services, and that risk sent shockwaves through both U.S. and global tech names yesterday. As tech faltered, investors rotated into more defensive corners. Banking and healthcare showed resilience, with U.S. and Asian indices seeing stronger performance from cyclicals and industrials. According to Westminster Asset Management, there's a clear shift out of mega-cap tech into sectors like pharmaceuticals and metals, where valuations look attractive and growth stories remain robust. For investors, this means paying close attention to sector rotation and looking for strength beyond the usual tech leaders. Now, for the SAA spocalypse, that's what some are calling the sharp drop in software-as-a-service stocks. Big names like Salesforce and Snowflake have seen their shares plunge more than 25% this year. While some fear AI will eat their lunch, VC veteran Bill Gurley suggests Buffett-style optimism. When investors panic hardest, opportunity knocks for those willing to look past the noise and buy solid companies under pressure. Shifting gears to crypto, Bitcoin-linked stocks are actually outperforming the coin itself. TeraWulf jumped 31% this month, and Cipher Digital and Hut 8 also posted gains, even as Bitcoin fell nearly 17%. The secret? These mining firms have secured long-term energy deals, giving them a strategic edge. Spot Bitcoin ETFs also attracted over $257 million in net inflows Tuesday, the strongest in weeks, hinting at resilience despite recent price weakness. And finally, Strategy, the Bitcoin treasury company formerly known as MicroStrategy, is now the most heavily shorted large-cap U.S. stock, with short bets totaling 14% of its market cap. While that sounds bearish, much of the positioning reflects complex basis trades rather than outright bets against the company. As always, shorts can add volatility, so keep an eye on trading swings for both the stock and its underlying Bitcoin holdings. Quick recap. The S&P closed down 1%, the Dow lost over 1,000 points, and the Nasdaq was hit hardest. Tech stocks are under pressure from AI fears, but rotation into defensives and cyclicals is underway. Bitcoin miners are resilient, and short interest is adding volatility to high-profile names. Looking ahead, watch for more earnings from major software companies and keep an eye on upcoming inflation data, which could drive next week's Federal Reserve meeting. For more insights, subscribe, follow, and stay with us for your daily market edge. Thanks for joining us on the Stock Market Daily News Podcast.